Before we start, let's look at how was the performance of our September 2022 picks. If you invested $1,000 each in all these stocks at the beginning of the picking month, it would have gone down to $4,535.42 after roughly 1 month. But if you invest $5,000 in VOO, which tracks the S&P 500 index, it would have gone down to $4,603.59. So our September 2022 picks underperformed S&P 500 by around 1.36%. The overall market dip was due to the US Federal Reserve's aggressive hiking campaign and UK's tax cut announcement last week that caused the US dollar to surge. But why the surge in USD is bad for the market? It is because for a multinational company, the surge of US dollar can hurt the profit they bring in from other countries. The higher the US dollar rate, the lower their profit when converted back into USD. But thanks to the market dip, some value stocks have become even cheaper. Let's look at the 5 undervalued stocks in my opinion, which you might want to add into your watch list. Today's video is sponsored by Usmart. Usmart is giving you these welcome rewards for free. To claim this, sign up an account, make and maintain your first deposit, and fulfill all requirements. Besides, Usmart also provides 0 commission for US, Hong Kong, and Singapore stocks, and no minimum charge for Singapore stocks. You can also buy fractional share and use Smart Plan to set recurring buy daily, weekly, or monthly from $100 onwards. What's more, the Smart Order and Future strategies curated by Usmart will help you to invest smarter. Sign up now using the link in the description below. Before we continue, please help me to smash the like button and subscribe to my channel if you would like to see more investment and side hustle related video, or if you like my background. My background is real one. Let me show you.
Ew.
你再说假吗？
The first stock today is Steel Dynamics Inc., ticker STLD. Steel Dynamics is an American steel producer based in Fort Wayne, Indiana. The company is the 3rd largest producer of carbon steel products in the US. The main revenue composition of Steel Dynamics is 71.7% on steel operations, 11.86% on metals recycling, and 9.57% on steel fabrication. Its revenue is mainly generated in the US. Steel Dynamics market cap is $13.26 billion. The stock is trading at around $72, down from the 52-week high of $100.37. In terms of our QC score, Steel Dynamics scored 11 out of 12. It has a super low PE, strong past 5-year EPS growth, super high return on equity. It also has more current assets than current liabilities. The only problem here is the lower gross margin. The analyst recommended rating is 2.5, in between buy and hold, and an average price of $86.85 indicates a 20% increase from the current price. The intrinsic value that I calculated using DCF method with 30% margin of safety is $136.75. Cheetah app also gave it a score of 6.99 out of 10, and its current price is trading under the Cheetah line by 48.56%. On the bright side, the world's steel consumption is still expected to be growing gradually for the next few decades. On the dark side, the current price of STLD could have priced in all the record-breaking revenue and net operating income in the year 2021. As a cyclical downturn of steel industry could have already begun, you may want to put this stock in your watch list, but not in your buy list. The second stock today is Stride Inc., ticker LRN. Stride Inc. is a for-profit education company that provides online and blended education programs headquartered in Herndon, Virginia. Their main revenue composition is 75.52% from general education and 19.06% from career learning for middle to high school level, and all revenue are purely from the US. Stride Inc.'s market cap is $1.82 billion. The stock is trading at around $42, down from the 52-week high of $44.93. Stride Inc. has a QC score of 9 out of 12. It has a high EPS growth in the past 5 years and low in debt, but the PE ratio, return on equity, and gross margin are not on the ideal level. The analyst recommended rating for Stride Inc. is 1.4, which is in between strong buy and buy. The price target of $53.50 indicates a 26% increase from the current price. The intrinsic value that I calculated using DCF method with 30% margin of safety is $45.47. Cheetah app also gave it a score of 6.08 out of 10, and its current price is trading under the Cheetah line by 30.28%. The increasing awareness of online education driven by the COVID-19 pandemic and Strides plans to tap into higher margin adult learning sector and many more efforts to lower their costs, Strides should be a hot stock that you should look out for. The third stock today is Bootbarn Holdings Inc., ticker BOOT. Bootbarn owns and operates a chain Western and workwear retail stores headquartered in Irvine, California. Their main revenue composition is 48% from footwear, 36% from apparel, and 16% from hats, accessories, and others. And almost all of their revenue is generated in the US. Bootbarn's market cap is $1.83 billion. The stock is trading at around $61, down from the 52-week high of $134.50. Bootbarn has a QC score of 10 out of 12. The past 5 years EPS growth is eye-catching. The company also has a low debt, but it may not have much cash or cash equivalent for the short-term liquidity. The analyst recommended rating for Bootbarn is 1.7, in between strong buy and buy, and the average price target of $98 indicates a 60% increase from the current price. The intrinsic value that I calculated using DCF method with 30% margin of safety is $72.60. Jita app also gave it a score of 6.68 out of 10, and its current price is trading under the Jita line by 65.66%. Bootbarn was able to maintain its revenue range at a healthy level during COVID-19 period and doing much better now post-COVID. With its expansion plan to open up more storefront and their strong return on capital employed, Bootbarn is a strong growth and value play that is worth to invest. The fourth stock today is Meta Platforms Inc., ticker META. Meta is a company that owns famous social media platforms like Facebook, Instagram, and WhatsApp, headquartered in Menlo Park, California.
No one don't know about them, right?
Their main revenue composition is 98.07% from all their apps, mainly generated in the US, Europe, and Asia Pacific. Meta's market cap is $380.58 billion. The stock is trading at around $141, down from the 52-week high of $353.83. Meta has a QC score of 12 out of 12. The things to note here is the historical low PE of 11.14 as compared to its previous PE range of 20 to 30. And if you realize, Meta is having zero debt. Yes, they have a lot of free cash flow, so they don't even need to borrow any money at all. The analyst recommended rating for Meta is 2.1, which is a buy, and the average price target of $226.23 indicates a 60% increase from the current price. The intrinsic value I calculated using DCF method with 30% margin of safety is $158.78. Jita app also gave it a score of 6.6 out of 10, and its current price is trading under the Jita line by 72.64%. Although Meta stock price is under a lot of pressure due to the small drop in revenue year over year, but I believe this post-COVID drop is just a pullback of the COVID surge.
You know lah, everyone is scrolling phone at home during COVID, right?
The market and investors have overreacted to the slight drop, but it means this is the best chance for growth and value investor to relook into this largest social network in the world with 3 billion monthly active users and maybe pour some cash into this money-making machine. The fifth stock today is Lam Research Corporation, ticker LRCX. Lam Research is an American supplier of wafer fabrication equipment and related services to the semiconductor industry, headquartered in Fremont, California. Its main revenue composition is 100% from manufacturing and servicing of wafer fabrication equipment and generated mainly from Korea, Taiwan, Japan, and Southeast Asia. Lam Research market cap is $52.28 billion. The stock is trading at around $381, down from a 52-week high of $731.85. Lam Research has a QC score of 12 out of 12. Their return on equity is amazing with such low debt level, and their profit margin looks pretty healthy too. The analyst recommended rating for Lam Research is 2.2, which is a buy, and the average price of $559.36 indicates a 47% increase from the current price. The intrinsic value that I calculated using DCF method with 30% margin of safety is $430.84. Jita app also gave it a score of 7.34 out of 10, and its current price is trading under the Jita line by 34.9%. Although Lam Research has been beaten down by recent semiconductor cyclical downtrend, but it is a pick and shovel play because it provides many machines and tools that semiconductor manufacturers need to produce their chip. And this chip's demand will increase tremendously as more demand from artificial intelligence industry comes into play. Only a few companies in the world can do what Lam Research does in such critical industry. So a no-brainer dividend growth stock like Lam Research should be in your watch list if you believe in the future of technology. So these are the 5 undervalued stocks in my opinion to put in your watch list now. You may comment down below or join our Telegram channel and group if you have any question or suggestion on any stocks which you think is undervalued. So that's all for today. Thank you so much for watching. I'll see you next time.